Most people look at FEPI and see one thing, a massive yield. But that's not the real question. The real question is what happens after the distributions hit your account? Does FEPI actually grow wealth? Does the income make up for the volatility? Or does the yield hide what's really happening underneath? In this video, I'm not giving opinions, I'm backtesting FEPI using real cash flow logic, income taken, income reinvested, and total return, so we can see what actually works over time. So stay tuned. Welcome back to Simply Money. Rex Fang and Innovation Equity Premium Income ETF FEPI. It's a high-income ETF designed to generate cash flow using an options-based strategy. Instead of focusing on price appreciation, FEPI prioritizes income first, paying out monthly distributions by selling options on its underlying holdings. That income can be attractive, but it comes with trade-offs. Because options income replaces some upside, price movement can be volatile and long-term results depend heavily on what you do with the cash. If you spend the income, results look very different than if you reinvest it. And that's exactly what we're testing today. This isn't about hype or yield chasing. It's about understanding how FEPI behaves in the real world, week by week, when distributions actually hit your account. For those that are new to the channel, what we're doing here, and we've done a whole series on this, you can check it out in the link here above. We're looking at what if I took my full income portfolio and I invested it into FEPI? What would it produce from its inception? How would it have looked if we did full drip, 50% drip, and no drip? And then we do a percentage calculator to find out maybe what's the optimum performance percentage and or income taking out to get what we want out of this fund. What we'll look at here is you got the inception date of 11/29/2023. The share price was $53.94. Again, it's a monthly payer. That would have got you 9,733 shares with a $525,000 portfolio. Now, this isn't financial advice. This is for information and educational purposes only. I'm not a financial advisor. I'm just sharing with you the data, what it's done, and letting you make your decisions. You're going to have to do your own due diligence. If you like this spreadsheet and you'd like to get a copy of it, you can always grab a copy in the link below at the Buy Me a Coffee. All of the spreadsheets are available there. This is the FEPI drip spreadsheet, and you can get that copy down there. What we have here, we'll look at column B, the share price. Let's start with that to see how this has performed. You can see it started at $53.94. It's been about 26 months that we've been tracking this. And as you can see, the share price has dropped significantly, got down here with the Liberation Day, the tariff stock market pullback for a couple days there, and then it started climbing back up. But it hasn't fully recovered. It did peak up here to about $46. And overall, in this time frame, we're down on share price about 17%. So that's something to keep an eye on with all of these high-yielding income-type ETFs. You have that, and you do have to monitor that. Second thing we want to look at is column C. This is the distributions. Again, you can see the distribution here at $1.15, $1.17, $1.19. Then it kind of stayed right in that area. It began dropping, though, in the mid-2024. And at 2025, it got below the $1 mark, and 98 cents got down here to 82 cents in April and May of 2025, and back up now into the high 90 cents, 97, 99 cents over the last 6 or 7 months. On average, it has paid out $1.04 per month per share. What we do here is we have 3 different columns. This first column, column D, what we're going to look at is this is a full drip. So whatever distribution you get, that's being reinvested into the fund to buy more shares. And you can see in the share column over here, column G, you have your full drip number of shares. We started with the 9,733. We got this first distribution of $1.15. Multiply that by your number of shares, and that gives you a distribution of $11,193. You're buying more shares at this share price. and that brings your share total to 9,941. Let's go down column D. You can see that because we're getting more and more shares, our distribution is going up, and we peak here about 13, right here at $14,000 beginning of 2025. Then it drops a little bit in April and May, but it has recovered and begins going up again, and we end here the last couple months of $16,000 per month. And even though this is a slightly lower distribution, we have gained 7,414 shares. We've almost doubled our share count in just over 2 years, which has really driven this distribution amount that's paying to us. And that brings the total that's paid to us to $362,000 that has been reinvested. Let's go over to the share value, your portfolio balance with the full drip here in column I. You can come down, you can see it's stayed green. We went down a little bit, but it's never gone below your initial investment. And it ends at a $764,000 balance for a gain of $239,000 or 45% gain. That's over 2 years, so that's very healthy. I'd be very happy with that. Let's look at the others before we kind of look at total return on all of these. Now, this column here, column E, is your 50% drip. For those who are new to the channel, this is how this works. You see your price, your distribution here in column D. You'll notice column E is exactly half of that, 50%. So whatever number you see in column E, you're getting that 2 times. The first time we're reinvesting it, and that's over here in this column. The shares 50% drip, and so it keeps track of how many shares you have. You're not gaining as many shares as the full drip because you're only using half of the amount. And because of that, these subsequent distributions are not going to be exactly half of the full because you don't have as many shares. The only time it's exactly half is this first month. But all of these in column E, you get this amount twice. The first time you get it, you're using it to buy more shares. Then you also get that exact same amount to use as income. And so as we come down here, you can see, again, this has been very consistent in the $5,500, $6,000 range. And it did dip a little bit when the share price dropped pretty drastically to $4,800, but then it rebounded nicely. And you're ending the last couple months at $6,000, $6,200. Over this time frame, you've got $157,000 that you've reinvested. So you've gained 3,205 shares, but you've also received $157,000 of income. That's about $78,000 a year, give or take, over the course of this time frame. So that's a nice, healthy income off of this $500,000 portfolio. And just for those who are wondering, no, I do not recommend buying 100% of full in on any fund, FEPI or any fund. I don't care how good the fund is. I never recommend going all in. We just do these scenarios to show you what it could do. And some of the funds, as you've watched the channel, some of them you would have lost your shirt on. And that's why we never go all in. Don't put all your eggs in one basket. Get a little diversification, build some hedging, know what you're doing, and seek advice if you do not understand what you're doing. Now, looking at the share price, your portfolio balance, on the 50% drip, you can see we were green for quite a while. We did dip into the red for a short period, but never a significant loss, and it's an unrealized loss because you didn't sell anything. You can see that it dipped down a little bit, but then it rebounded, and at the end of this time frame, you're up $51,000 total, or about an almost just 10% return on the portfolio balance. But don't forget, you also received this $157,000 in cash. Now, those who are watching, you see a lot of red next to us, so let's get into that and see what happens. This is the zero drip, means we're taking the distribution, we're living off of it, we're using it, doing whatever, but we're not buying more of FEPI. Again, we have the $11,193 distribution this first month. It's very consistent, about $10,000 gets down to here. Again, we drop as the share price dropped in April, May, down to $8,000, and it's begun to rebound. Some were back up to $9,500, but over this time frame, it's averaged $10,595. And we don't get any new shares because we're taking this amount and we're living off of it or using it to buy other funds. So you still have the 9,733 shares, and you have gained $275,000 of income. You've gotten $135,000 a year of income, which is very healthy, very strong income off of that size of a portfolio. But what you've also got to look at is over that course of this time, your balance, what you started with, has dropped because we hit the red, and we have stayed in the red since then because you're not buying more shares, and that share price is down 17%. So your portfolio balance is down $91,000 or 17% over 2 years. I would not be comfortable with that. If, say, this was my full portfolio, I would definitely not be comfortable with that. Now, I would be okay with that if it was a portion of my portfolio that was helping drive my income, but I would still not want to fully take all the income. I would want to try to balance that, and we're going to look at that here in a minute, how you can do that. But before we do, let's look at the total returns. For those who see this share price and your first thing is you see this negative 17, you're like, I'm out. I can't do that. And that's fine if you're not comfortable with that. But you have to understand that's not the full picture of your total return because you've been receiving distributions. So with the full drip, we know that we were up $239,000. We're happy with that. It's a 21% return annually over the course of these 2 years. With the 50% drip, we were still up $51,000, almost $52,000. Plus, we received this $157,000 in cash. So that means your total return was $209,000 or 39, almost 40%, which averages out to 18% annually. And here's where a lot of people don't understand, and this can be helpful for you to see this, is although on the no drip, your portfolio is down $91,000, you've received $275,000 in cash, and you have to count that distribution that you took as part of your total return. And so you take that cash and you subtract what your balance is down, your total return brought in $184,000 or 35%, which is 16% annually, which is still very good. So even though you're seeing this monster red line here, all this drop, your portfolio total return is still up 16% annually or 35% total return. Now, if you want to go ahead and get a copy of this, like I said, you can get a copy in the link below on the Buy Me a Coffee, and you're able to put in the date that you want to start. Say you bought into it on January 29th, 2025, you can put that date here and it will update, and you can put how much did you initially invest, and you can see how you've done, and then you can add to that. You'll have to do it manually because I don't have the future dates in there. So you'll have to manually add what it does and what it pays. But if you want to just see how you've done thus far, you can do that. And then we have these two opportunities, these two calculators over here. This first one is we can adjust what percentage we drip. For those that don't know, most brokerages that I know of, you can't set a percentage. You either drip 100% or you take the distribution. So to do this, what you would do is you would set your drip off so the distribution would go into your brokerage account, into your cash holding, and then you could put in the amount back into the fund. Here we're setting up 40% that we're going to drip, and we're going to take 60%. And I like doing this to see, like on the zero drip, you can see we're down 17%. We lost $91,000. We want to set this to a percentage to see what amount can we keep as cash and still maintain our balance at the end of this time frame. And so I set it at 40%. We're going to drip. We're going to buy more shares, and we keep track of that over here in this column P. And then that allows 60% that we're going to keep as cash, and this would be your income. And you can adjust this. You could put 30% if you wanted, and it'll adjust it and updates everything. But we're going to stick with 40% for this scenario. And as we come down, you can see your distributions. I want to look at this column here where you're taking this as income. You're getting a nice income of $6,700. It stays pretty consistent. It did drop down here a little bit to $5,500, but then it's back up into the $7,000 range. And you've averaged over this time $7,000 per month. The good thing is, though, while you've received that $7,000 a month as income, your portfolio has ended up $20,000. So again, it's up a little bit. It was down slightly, and then it's rebounded. So you could adjust that if you want to do 35%. Whatever the case is, you can adjust that to suit what you want to do, or you can see, oh, I want to get it to where I'm getting about $5,000. Well, if you want to do dollar amounts, we have that over here. Let's say I just want to keep a portion out. I need $2,000 to supplement my income, and everything else is going back into the fund. So I just set the dollar amount here. If I wanted to do $3,000, I could do that, and it adjusts everything for me. But we're going to go with $2,000 just for this scenario. So we have $2,000 that we're keeping, and that means this is row S is how much you're reinvesting. As we come down, you can see our share quantity here in column U with $2,000 as income. It doesn't increase. We don't have a cost of living calculator there or anything. It just gives you a general idea of what could happen if you receive, say, $2,000 to supplement your income. You can see how you're increasing how much you're investing. You gain 6,300 shares. You're gaining $54,000 of income. And your portfolio is still increased $190,000. So this is a nice way to play around with it. Again, you can set the date you started, how much you have. Maybe you have $50,000 that you invest in a fund like this, and you're using it to supplement your income. Now, obviously, you can't take $2,000 a month on this. So let's just say we're going to do $500 a month. We want to add to just supplement our income. And with that, you're still up in your portfolio. You're getting $500 a month income, and you're growing your portfolio slightly. So say you're in retirement and you're like, okay, I'm going to buy a little bit of this fund. I'm going to put $50K into it, and I want it to take out $500 a month. How would I do? What if I push it a little bit? Let's go to $800 a month. Can this sustain that? Yes, it does. It continues. You're right at the same balance. You can see you had a little bit of drawdown here, but you're getting $800 a month off of a $50,000 investment and maintaining your balance. So there's a lot you can do with this sheet to play with it, see what it does, how it performs for you, the different amounts you want to put in there, whatever the amount might be, and you can play around with that. Now, as far as this main calculator over here, this section here, people say, well, $525,000, that's crazy. I want you to look right here. These numbers down here, your percentages don't change. I can put $5, I can put $500, I can put $50,000, I can put $5 million. The numbers are going to change, the dollar amounts, but the percentage is the percentage. We do this. We started with this, and we had requests for this amount for people asking, can you do that? What would happen if you did that? And so we began the series that way, and we're sticking with this number on the series. But you can always, again, change that to 50,000 and see what happens. And as you see, your percentages are exactly the same. So that's the FEPI all-in scenario. I appreciate you joining me. Don't forget to hit that like and subscribe button. Share this with others. Throw it on your social media. It really helps the channel. And we'll see you next time on Simply Money.